We are talking about the stock named as Excel Industries Limited. So last week we have had the earnings of this stock and it gave a breakout above this level which I have highlighted on the screen. So this was consolidating in a narrow zone for quite some time, and before the earnings, I believe it broke out, and on the earnings after the earnings day, so it came down a bit, but still it's a nice breakout that we see in this one. So let me highlight what all things are there in this name and let's look into this way. So this is like stage four decline. That's been in decline for quite a while. So I'll just highlight. So this was an inverted pin bar, and thereafter it went into a nice decline in stage four, and it made a low of 370.5. Thereafter, it undercut that low and made another low of 335. And further, this was not for the low, but 343 and 355. So back to back, we have had multiple lows, but again, this is a V-shaped formation, and we can call it as double bottom. So I'll just highlight on the chart. So it's double bottom, and here we can see that it's a nice undercut and a reversal back, undercut and reversal back. So basically, anyone who might have kept the stop loss around say 370 rupees, that stop loss is gone like two times, and thereafter it went into a consolidation, a short one, and we are seeing a nice breakout, right? So the high of this candle is around 462 rupees, and the high on the left hand side is around 467. I'll draw another line, and this is around this one. So basically, this is the actual consolidation zone wherein the stock is taking the resistance around 563. I'll take a zone of say 550 to 563. So within this zone of 550 to 563, the stock has been consolidating for quite some time, right? So as you can see from this level, right, from this zone to this one, so it has been consolidating for quite a while, and recently it has crossed above this one. So it is an early stage to break out. I'll just highlight this one. So it's an early stage to break out where the stock is trying to move above this line, but again, since we know that there is a resistance on the upside, and that is why you can see a nice wick formation on the right hand side. Okay. So overall, we can say that this is stage four decline. I'll just mark it here. So this is stage four. And then we have a nice stage one consolidation, stage one. And then it's trying to move into stage two. It's still early, but again, as we know that there is a resistance zone on the upside, so it has to just consolidate between, say, this moving average of, say, 439 and the high of 550. And any such consolidation, if it happens on the right hand side, right, so it would be a very good formation, and thereafter we can see a nice breakout thereafter, and that is the scenario in this case. So let's zoom back and look into this name, how this name has performed for years, right? So if we can look into this chart, so basically the journey started at this point, and thereafter it became a nice multi-bagger in one go and went into a decline. Then further it went up, and a nice consolidation happened, and a massive breakout happened like this. Okay, it's a bit of, I think, doubler, more than doubler in one go, and then a high tide flag formation happened, and thereafter a breakout that continued to make new highs till 415 rupees. And beyond that, it went into a decline. And after a nice formation, almost a double bottom formation, it broke out. And here we can see that it's a nice base formation, and then a breakout happened, and a nice handle formation. And beyond that, it went into a parabolic rise. After this parabolic rise, the stock went into a steep stage four decline. And this is where it is consolidating right now. And this is the state of the chart as of now. So I'll just wrap it up right here, and we'll move forward to screener, and then we'll see the formation there. Okay. So I'll share my screen, and I'll just go to this stock, and I'll just type Excel, and we'll see this one in here. So now we'll discuss about what this company does and what all things, the new things that this company is doing, right? So first of all, it's a capital goods company wherein this company is into building like equipments for the FMCG companies of the world. Okay. So, for example, if you know about Nestle, Mondelez, and you have Bikazi and multiple other clients, like Hershey's also. So, a lot of clients in the chocolate, FMCG, fast food, snacking, all those guys. So, basically, whenever they do the capital expenditure, they buy in the utensils or the equipment to manufacture their product, right? So, those equipments are kind of very specialized equipments, and they need a high level of hygiene, tolerance, and nothing could be far away from, say, high quality product, right? So in that case, this company pitch comes in, right? So it has been into business, I think, for last since 90s, early 90s, and I think more than 30 years it has been into this business, and the promoters are looking into this segment as a whole. So the thing is, it has been a steady compounder, and the story is around import substitution. So all these guys like Nestle and Hershey's and Bikaji, earlier they used to say procure the European equipments, right? So a lot of firms are based out of Germany and elsewhere. The quality is really nice, but the cost is also nice. So in that aspect, one can understand that if an Indian company is trying to manufacture such equipments, which are kind of unique, tech savvy, and kind of less costly, then again, that's a case of import substitution. And in case the companies just procure these items, then they save on multiple fronts. I mean, the cost also and servicing also. These guys are very good in servicing, and they help the clients big time. Now, this is the overall business. So the whole future of this company is tied up to the food processing industry as a whole, especially linked to FMCG and confectionery and chocolates and fast foods, processed foods and stuff. Okay, so just think about that. Now, this is a very small company, 791 crores. The float is very low. This is an undiscovered kind of company, and a lot of under researched, and the valuation is also good right now. That is why we are talking. So as you can see that the dividend yield is around 2.45%, almost 2.5% kind of dividend yield is there, which means that the company is a bit shareholder friendly, wherein all the capital apart from growth, it redistributes amongst the shareholders, right? So it's kind of a analogy where I can mention that this company is a way of investment wherein you can see the cash being sitting in the bank, right? For example, if you have a savings account in the bank, right? So near about you would get close to say 2.3 to 2.5% yield, right? So if this name does not move to any price, right? Then it's a 2.5% dividend yield company per annum, right? So that's the story. So it's kind of a bit undervalued, we can say. The current PE, as you can see on the screen, is around 25. The yield is around 2.45. A bit of costliness is there with respect to market to sales, 3.54. It's a bit high. But again, that comes with a caveat that the margin that this company maintains is also huge. Like it's in the range of, say, a IT software company or something like that. 16% kind of margin is very high. Let's look into the margin profile. So the margin in the latest quarter has been around 21.5%. It's a bit high, obviously, from the historical margins. The past quarter, it was kind of low, 12%. So there would be a bit of deviation in the margin. For the whole year, the company ended close to, say, 18%. Past 5 years margin is around 15.6%, right? So we can see a bit of margin expansion this year. And that is where we can see that the profitability would also be a bit high. So with 21.5% kind of operating profit margin in the latest quarter, net profit margin around 16%. EBITDA margin is close to 21%, which is very nice for this small capital goods company. And let's look into the growth, right? So in the latest quarter, if we can see, the top line growth was around 87.6%, which is very high, which is very nice. And the profit growth is around 134%, and the operating profit growth is 213%. So top line grew very fast, and the bottom line as well as operating profit had a very steep jump in this quarter. Quarter on quarter also, it has had a very good move, and sales growth annually is also very nice, which means that annually it is growing around 25% and profit growth is around 83%, which is very high, right? So it's a very fast growing company with a low valuation. So obviously, let's calculate the pay ratio in our mind. Let's not look into this one. So basically, if the current PE is around 25.4 and say annually, right now it is going around 83%. Let's assume it might keep on going, say, at a rate of say 60% or something around that, then the pay ratio is somewhere less than zero point 0.5 and close to 0.4. So that's very high. Okay. TTM peg is obviously very low, and the forward peg might be low. That's an extrapolation per se, but that's the scenario. Now, the cream of the discussion lies into analyzing the cash flow. So the great highlight of the earnings this year is the rise in cash flow. So as we can see that cash flow was kind of stuck in the range of 30, 39, and 31 for last 3 years. But this year it has risen to 51%. So basically almost 80% kind of rise in cash flow from operations has happened this year. And the numbers are quite staggering. So this is a very nice information to understand. And we can see that for last 4 years, barring apart this year, the cash conversion has been very nice. So this year, almost 149% of the operating profit has been converted into cash, which is really, very nice. And as we can see that the cash flow has landed towards 51. Free cash flow is kind of negative as of now, but that comes with a situation wherein the company has done a bit of capex in last 2 to 3 years. So basically, till 2023, if we can see, the assets was in the range of say 13 crores or something. So it is a very high yielding asset, and beyond that, it did some capex like 25 crores and beyond. So the current asset is around 31 crores. So it has almost tripled, almost kind of not tripled, 2.5x the asset which was there in 2023. Now let's see the price, and we can see the price in here. So the stock peaked around November of 23, right? So the time when we can see that, okay, the assets, right? We can see that March 23, and a few months later, the stock peaked out, right? And it went into a stage 4 decline. And during that decline, we can see that the assets have increased by, say, 2.5x, right? So this is the capability that the company has created in this while, right? So that they have, their capex is completed and nothing is remaining. And that is why we can see that a bit of increase is there in their depreciation, right? So from 23 till 23, let's see this point, right? So depreciation was in the range of, say, 10, so which means that nothing was there actually. So nothing was there when it comes to depreciation, and right now it's around 11, sorry, 1. It keeps on going like that. So we'll have to see further as in how depreciation pans out, right? So this is kind of okay, and we'll come back to balance sheet. So this asset has increased, and we'll see further how things yield further, right? And beyond that, coming to the discussion to cash flow, now again 51 crores kind of cash flow is there. And then we'll come back to this one. So the valuation based on cash flow is very cheap, right? So it's trading at 15 times the cash flow, which is a very, very good situation to be in, right? So the P might look like, say, 25, and the forward looking P is close to 20 and below, but the cash flow is very cheap, around 15, right? So, and this is a very good scenario wherein uh, this is a very cream spot to be in with such a high cash conversion and free cash flow yield, and the valuation is also very favorable. So that is why we can see that the return ratio is also very nice. So basically, let's look into the return ratio. So standard ROC, if we look into, is 32% ROC, 25% ROE, right? And this is a very nice spot, right? Very high quality business with good valuation as of now, debt free, no debt is there. That's again another good sign. I'll show you the cash in the balance sheet. Meanwhile, the return ratios are fantastic. Like this is at 38.4, 28.6, and in this one, this is expanded. So there has been an expansion in the return ratios in last 2 quarters, and that's the delta. Ultimately, you can see that PE has crashed and return ratios have expanded. So that gives a delta per se. Now we'll look into the cash, right? So just let's move to balance sheet, and we'll go to other assets, and let's look into the cash and cash equivalent. So around 16 crores is there, and then other items are also there. So yeah, it's kind of moderate only, and that's fine, I believe. Yes, I think. Yeah, let be. So it's managing its cash effectively. So let's move on to the ratios, right? So debtor days is small. So basically, you can see this business is a good business in the sense that it is managing its debtor days very nicely, which means that the customers are giving advances and payment milestones might be there, right? So basically, the time when they procure the raw material till the time they ship their goods, right? The customers might take care of the situation. So debtor days is kind of low and payable days is high. And this is the delta, right? So inventory days would be a bit high because it's kind of a capital goods company maintaining equipment and stuff. But overall, you can see cash conversion cycle has improved drastically, and this is where we can see that the increase in cash flow, right? So return ratios are kind of fantastic, and we'll move down. Everything is fine. Let's look into the shareholding. The shareholding is kind of nice, right? So almost 50% of the company is being held by the promoters intact, right? And there are no big institutions, as we can see that FIs is kind of negligible. DI, there is only one fund right now, 1.36, 1.49, that 1.442. They're kind of increasing their stake. Almost 80,000 shareholders are there within the country, and it's kind of a bit low. I mean, a very low, very undiscovered name, highly undiscovered that people might not know. And amongst the public shareholders, we can see that there is, Anirudh Malpani is a popular star investor, and he has taken a position, say, in September 25, and then he has been increasing since then. So this is a good sign. There is one fund and one star investor which is there, and that is a very good sign, which with less number of shareholders within the country. So this is all from the screener, wherein we can see that this is in a very sweet spot. And we'll move to, say, the screen, wherein we can see that it's kind of a bit of lumpy business, wherein it creates a peak, then comes down, the sales goes up, flattens, goes up, comes down, goes up, comes down. Now there's a revival. In last 3 quarters, after making the low, it's kind of a bit of revival, and then ultimately the biggest revival would happen when it crosses the prior all-time high, right? So every time the business also crosses the all-time high, right? A new high is being created. For example, in this one, right? It was the high. It did not cross for a long time, and when it broke out of this one, there a series of nice quarters came in, right? And then it went into a decline, and thereafter, right, a rise, and then a rise, and then a decline. So this is kind of an early up cycle which we can see, and a nice one overall. So on the right hand on this side, we can see the chart and we can see that the margins are a bit of expanding, close to say 60% gross profit margin. That's a very good business, and the margins are kind of good for last 3 to 4 years as a whole with expanding sales. Right now, we'll move forward to looking into the underneath strength or what we call as the underneath indicators, which we can be used to infer a great deal of information, right? So I'll just open the sheet and then we'll discuss it further. And I'll just share my screen, and this is the screen. So we'll start here. So this is a great business with a very good score in here. And for this year, we can see that okay, a bit of a lag is there, that the profits have not been translated into say reserves, and that is why we can see a yellow indicator here. Rest all things are good. So ultimately, it's kind of a 80 to 83% robust business. And quarterly thing, if we analyze right this one, so this is the highest ever sales and highest ever operating profit, highest ever PAT and EPS. So the numbers that we see, right, last 3 quarters, it's staggering. So the share price is not moving actually. So share price is kind of stagnant, and the numbers have increased massively. And this is where we can see that there is kind of a sales acceleration. So 21%, 45%, 88% after de-acceleration. So this is de-acceleration and this is acceleration. So operating profit is kind of accelerating also. So from 48% growth to 118 to 236%. It's a big time operating profit acceleration, and thereafter the earnings are in triple rate. So margins are high, highest ever sales are being done, highest ever profits are being done. PAT is highest, EPS is highest, right? Margins are at highest. Acceleration in the earnings is there, right? A bit of caveat that it is a cyclical or capital goods company, a bit of cyclical in nature. So a prediction could not be made as in how the other 3 quarters might go. It depends upon the order book as whole, but it is a business that needs to be evaluated on a year-to-year basis. And coming back to the price cycle, right? With everything that we have seen till now, we'll move towards the price again, and with the fundamentals in place and the valuation in place and everything intact, right? So we can say that this is kind of a double bottom in a good stage one constellation and a nice breakout happening. And we'll have to wait for the final constellation on the right hand side. And if the breakout happens, then again, if the earnings continue and discovery of the price happens in the market, then we can say that things are going to be fine. Okay. That time, we'll just wait and see how things pan out. And ultimately, has to be a stop loss in place. Okay. Without that, nothing would work. Okay. So we'll just stop here, and that's it.